happens? Where are San Diego's real estate prices heading? We all heard that the government reported on Friday consumer prices climbed 8.6% over the year through May, the fastest rate of increase in 4 decades. But is it 8.6%? My inflation rate is really 25%. All you need to do is go to Dollar Tree because it's not $1 anymore, it's $1.25. So which gives the inflation rate of 25%, and I think that's more realistic than what all these high-paid Fed and all other economists are saying. But what has it to do with real estate? Find out. My name is Lenska with Lenska Realty. I provide broker services and also consult with you and explore the feasibility of adding an ADU, your best ROI, return of your investment in decades, adding an ADU. According to Black Knight, May was one of the least affordable months since 2006. It takes to pay for the mortgage, which is obviously no surprise. This is obviously probably a May chart, which has interest rates of 5.25. We are approaching 6% currently. But let's check out what all this interest rate hike did for San Diego. Here are the May key statistics that we have a median home price at about $860. For the detached is approaching $1 million, and for the attached ones it stands at about $670,000. We have a average price per square foot that's up about 23% to $635 per square foot compared to May. Congratulations if you bought a house or investment property in May, it was at $211. So we're looking at a 300% increase since May 2009. The days on market is still very fast, only 18 days, but obviously we see the pending sales decrease about 21% and the sold listings because we had less inventory. So we do have the inventory crept up to about 1 month, but that was in May. In the last 3 weeks in June, we have seen inventory go up to over 4,000 compared to 1,700 in last year. So we have a 130% increase of inventory, and it does have an effect on price. Which way? Okay, the price is actually leveling off at about $860 because of that increased inventory, but that's kind of seasonal normal because when is the money made? Always when in the first 6 months. So here are the interest rates. That's pretty dramatic about how a 30-year fixed about 5.65. Your monthly payment per 100,000 is about $575, which is nearly double what it used to be when you had a rate of under 3. Is it time to panic yet if you are a seller? Maybe in certain zip codes, or maybe not in certain zip codes. So these National City, El Cajon, and Spring Valley are leading the way for the inventory levels to decrease. And it's no surprise because these are the more affordable zip codes compared to obviously Oceanside, Carlsbad, and Scripps Ranch, where actually we are seeing that inventory levels are increasing. We have to have inventory increase for prices to drop for sure. According to Realtor.com, Los Angeles is actually on the list of where home prices are falling the most. You have Rochester, Detroit, Pittsburgh. I'm missing Boise, Idaho. Prices have really been going down there since I assume all the Californians that wanted to move out of California moved and took all their big cash back to Austin and Boise. So see some of the price declines happening there. How much do you think maybe San Diego will decline? So maybe you possibly can afford a house here again. So Nick from RE Reventure Consulting says that San Diego has a possibility of declining about 22%. A good way to forecast if there is maybe a downturn coming is looking at the sold prices. Currently, we're still looking at 50% for the sold listings are closing above list price, and I still see 100 and 200 or even $400,000 above list price. Does it mean sellers are panicking? Because the United States wise, we do see more price reductions. I've been watching in San Diego, and yes, we do have a little bit more price reductions, but it's probably because sellers have gotten so greedy and really raised the prices when they listed it that we're coming into a little bit more realistic market. So for real estate agents, it's really important right now to price the homes right, since we do deal with the higher interest rates. Also, what is very interesting, and not just the open house showings are down, and the home builders sentiment is down as well because of decreased foot traffic. We also see that the interest kind of lacked. So we have showings are down 50%. In order to reach a more balanced market, we do have to increase inventory, which we've seen is happening, but the Fed's job was to do some demand destruction. And is he succeeding? I think he's succeeding so far. It always starts with the investors. And if you see Redfin's graph on the demand for second homes, practically has plummeted over the last 2 to 5 months. And it's cratered because obviously we have lost a lot of that working from home business, plus the easy money, and the Fed is signaling future tightening, and obviously that always has an impact on investors' decision, and people are going back to the office. So maybe we see some more inventory coming for people that are stretched now and inflation is hitting and putting their second homes on the market. Now, it always is good to know what the public thinks about. Is it a good time to buy or sell, or what will home prices do and mortgage rates? The home purchase sentiment from Fannie Mae decreased just a little bit, but it's down nearly 12 points year over year. What does it mean? Look at the net change. It's 41%. Would saying people 80% nearly think that's a bad time to buy a house, and obviously sellers think it's a good time. So there's really that big discrepancies, and also the consumer's expectation that their personal financial situation will worsen over the next year reached an all-time high. And that's something to really consider. So I think people are feeling the unaffordability and feeling the inflation. By the way, credit card debt is skyrocketing, and also the savings rate has been declining. So here is, I think it's pretty stark picture that bad time to buy is, although it's the biggest discrepancy we have seen reversed from obviously May 2012 was a great time to buy. Is the American dream dead? According to John Burns, a little over a year ago, the monthly cost of owning, as they calculated, and renting were virtually identical. Now, owning a home costs an average of $830 more per month than renting. This differential is almost $200 higher than at any time since the turn of the century. So while rents have been rising too, the disparity between rising homeownership cost and rising rents has been greatest where home prices have accelerated the most. In Nashville, Denver, Tampa, and Phoenix all have witnessed the biggest disparity in increasing homeownership versus rental cost, as shown in this graph here. So they expect that rental demand is going to be strong and growing in the coming years as homeownership is out of Americans' reach. For your investor, here's an interesting statistic. I think the average apartment size for monthly rent of $1,500 in selected cities. And I think we have a hard time getting people to move to Wichita or Memphis or El Paso. But the medium blue, Nashville, Orlando, Atlanta, New Orleans, Las Vegas, Dallas, Philadelphia, and Denver have been all receiving in-migration. And then Seattle got to a point, and even Chicago is getting pretty expensive. And obviously we know Los Angeles and San Francisco. So where are we? Median home price is definitely leveling off, and the inventory is up over 100% in pretty much all the zip codes by now, and buyer demand is down. So the inflation is taking its toll, but real estate is always a good hedge. So stay tuned, learn more, get educated, join one of my real estate investing field trips where we go out and hunt for deals and share amongst like-minded people. Thanks for listening and being fans.